Good morning. Welcome to the Mortgage Rate Forecast with Scott Criss. It's September 6th. Let's get started with the charts. Here's what we got. Bonds are killing it today. We opened at about 103.70, and we're currently trading all the way up here past 103.90. So the craziest part is there wasn't really a lot of news this morning. So here's the scoop. Support's coming in below us at 103.50 and 103.38. The support's here in the green. And so resistance is coming in at 103.78 and 103.94. So we're actually peaking just a little bit above this resistance. And if we close above this resistance level right here, if you can look at my mouse, that means this could actually be a new floor of support for us. So that's actually pretty cool if we can close there. So, but you can see we're pushing up above it, coming back down, and trading right at that resistance level. So at any rate, that is the charts. Really not a lot of news. It's really the ISM came out. Not a market mover, guys. Not a market mover at all. But I think really what a lot of the trading is from today is there's finally been a reaction off of the employment report from last Friday. You know, there's really not only a low number of jobs created, but it was low quality jobs. It wasn't, you know, people making $200,000 a year. It was more like the minimum wage jobs. And so though they're needed and though it's good that those jobs are being created, that is not as big of an economic help as the higher paying jobs. So that, I think, is what's really pushing the bond market up today. So we'll have to keep a close eye on it, but it's looking pretty darn good right now, guys. To quantify where we're at, Freddie Mac reported. Now, this is still going back into July. Freddie Mac has not released their numbers for August yet. But back in July, Freddie Mac came out and said the average rate was about 3.44, and the average consumer is paying half of a point for that rate. So from looking at where we're at now, we're about 14 cents better today. So the average consumer could be getting a similar rate for less than half of a point. So that's actually really good news out there. But what's the consensus? What's the forecast? Well, one of the analysts that I follow was bearish. He thought bonds were just going to tank and get worse. Now, I always kind of laugh because this analyst is, I always say, is kind of like the pessimist of the two. The other analyst that I follow is a little bit more optimistic. And and he was going neutral, but now he's turned bullish, and the pessimist has turned neutral. So I'm kind of thinking, you know what? I'm going to call bonds coming out, and I think we're gonna either close right at that resistance or maybe higher. I think bonds are going to trade maybe between 103.50 at the worst, but probably consistently trading closer to 104. So what do you do if you're getting a mortgage right now? How do you do this? Well, I think we're at the higher end of the trading range. If it was me, I'd probably take my chips off the table and lock in today. I think that's the safest thing to do because, you know, we may only get better by about 6 cents over the next week or so, but we could get worse by as much as 47 cents. So that means, you know what, if I'm a betting man, you know, I've already kind of gotten my wins. Okay, and if I float and I don't lock in my interest rate, that same rate, I could pay half of a point, you know, if the market turns on me later on. But my chance of the market getting better, I think, is a little bit lighter. I think I might be able to get better by 6 cents, which is not even an eighth of a point. So if it was me, I'm not a big gambling man, but I'd probably take my chips off the table, lock that baby in. That's probably the safest thing to do right now. But let's wait and see what happens with the market. You know, if you're a little bit tougher than I am, which many people are, you may want to leave your chips on the table and see how this plays out. So anyway, that is the forecast for today. And hey, we'd love to hear from you. You know, what do you think? Should people be locking in right now? Should they be floating? Love to hear your comments down below. Everything likes to be liked, so does this video. You know what to do. And if it's your first time on the channel, top left, you can hit subscribe. And that will keep you posted when we have new news coming out on the markets and whether or not rates are getting worse or better. And if none of this makes sense for you, it's okay. It's a little weird. At the top right, little guy scratching his head. Click him, and that'll take you to Mortgage Bonds 101, and that'll teach you the basics, the fundamentals that you should know as a consumer getting a mortgage, and how these bond charts impact you, whether you're going to get a better rate fee structure or a worse one, just purely based on market. Anyway, hope that helps. We'll see you guys soon. Bye-bye.